credit unions and how that has impacted our practice. We're going to talk about the investment side, we're going to talk about the insurance side, and how we bridge that. Prior to doing that, I want to introduce some people. For me, we've got the founder of our firm, Bob Wagner, who started this company in 1981, and my beautiful mother, who is the rock and the foundation at our house, right here in Garnet Wagner. We're fortunate to have Tracy Colazzo here with us. Now, we also have a few advisors in the room, so I do appreciate everyone being here and participating. We have one of our newest relationships coming from Insurance Unlimited. Eddie, we appreciate you and your team being here. And we have some of our oldest relationships, and Jeff and Mike and Ryan and Zach, so we do appreciate y'all participating with us today. Now, our firm was founded in 1981 primarily as an insurance and mutual fund company. Over time, that has evolved. The company has expanded and grown to add investment advisory services, to buy our own registered investment advisory firm in 2007. The impact of those decisions were to help our business grow to the next level. We used to track how much death benefit a case was. Then we used to track how much the gross premium was. And then they changed all of that, and we had to track how we ate. So we had to track our commissions. We had to track our revenue and start running our organization from an agency to a firm, to an organization. Now, over the years, I tease Eddie, because Eddie doesn't like the word firm, so I said firm and organization just to appease him. We've been fortunate in that our organization has grown, and what we represent today is a little over 45 registered reps. We have about 150 insurance agents in our organization. We span across about 38 states, and we manage a little over $600 million in assets between brokerage and assets under management. We have strategic partnerships across the United States, and we believe that the advisor and the client come first. And our number one goal is to serve others. We believe that that's why the good Lord put us here, and that's what we'll focus on. So, if I can get the clickers clicking. I'm pushing it. Where's my tech guy? There we go. All right, there we go. Operator error. So we've got mission and vision. We're going to discuss a little bit of that today, just so you get a little bit of flavor for our organization. Overview of our strategic partnership with LPL on the BD side, but more importantly, we're going to discuss how we serve institutions and advisors, and the investments that institutions like that include insurance, and how we participate with AFG in that strategic partnership. Our cost platform services, there are some things on there that we have to cover because of compliance, so Don can attest to that. So we'll go through that as well. Our commitment to you. At NFA Wealth Management, we are driven to help each and every client reach their vision of financial success. Whatever that may be to you. Because when we partner with an institution, and when I say institutions, you have to understand there's a disconnect between banks and credit unions. Credit unions do not like to be associated with banks. Banks do not like to be associated with credit unions. And you don't want to sit in a board meeting with the credit union and call them a bank. Or the president of the credit union will ask you why you're in his boardroom calling his credit union a bank. Been there, done that, have a t-shirt. So, the words that we live by is only by helping others achieve their goals will we reach ours. It's important that you kind of understand our take and our vantage point on how we come about planning in general and how we come about servitude in general. We talked about it at breakfast, about humbling ourselves and serving others. And that's truly what this space needs when you're working both with advisors, agents, institutions, and and banks and credit unions, whatever that may be in your organization, because everyone is looking for one thing: service. They don't want to call 1-800-HOPE and try to get something resolved. They want to deal with a person. They want to know that somebody empathizes or sympathizes with them and will work to resolve their situation. So you've had two different talks today, one from Hancock this morning on vitality and changing the conversation, and one yesterday by Harley with One America discussing changing the conversation of long-term care. So it's our task as agents and advisors to change the conversation to what is your biggest pain point. How can we serve you? And what steps can we put in place to truly build that for you? Whatever your vision is. This thing about got me whipped. There we go. So anyway, well, I'm hitting the right button this time. We're founded on 5 F's. Faith, family, finance, fitness, and fun. Faith, it's a personal choice, but you have to have faith in the people that you work with. We believe in the vision that AFG has, we believe in our vision, and we believe in our advisors and our agents and the people that we set up strategic partnerships with. Family, blessed to have my mother and father here. We have Tracy Colazo, who's been with us over 2 decades. My wife, after Sunday morning porch talk, said that I was a better person when I owned my own business than when I worked for somebody else. We affectionately call that time period the $250,000 pay swing because we left a 6-figure job, took out a 6-figure note and called Dad and said, "Hey Dad, I think I'm going to start my own company, but I don't want to sell insurance." Hesitant. Pause. Okay. Well, you're going to have to figure it out then, boy. Okay. So that's what we did. Now, by the grace of God, we were able to build our finances back up, and that's our 3rd F. And we think you have to be strong financially. Now, we feel that the partnership that we have with NFA Wealth Management, with AFG and their team, and the host of custodians that we utilize can do that in these great carriers that you have here today. Fitness, where's our Hancock guy? Vitality, a little light on vitality some days, but I'm heavy on mental fitness. We do believe that you have to be physically fit, mentally fit to do this business. It is a stress-filled job. You handle some things that are the most important in your clients' lives. Their financial futures or the futures of generations yet to come. We do a lot of insurance in this room, so you build legacies, you build plans, you build cash plans. So it's important that mentally that you get education. That's what these conferences are so good about. You can take 1 or 2 nuggets away from this meeting and it refreshes you, it builds you, it gives you something to grow from that can help your practice and add to your bottom line. Now, our 5th F is fun. If you're not having fun, folks, why do it? We truly believe you have to enjoy what you do and enjoy the people that you work with. Fortunately, we're in a position where we don't have to work with a lot of people we don't like. You own your business. If Zelensky doesn't like me, he doesn't have to work with me. Just kind of stuck with me because I like his honey. Our strategic partners are LPL Financial Group, Charles Schwab, TD Ameritrade, AFG, multiple life insurance companies. We partner with multiple third-party administrators, multiple CPA and attorneys all across the country. We do this because when we walk into a city with our groups of advisors and our teams, we source attorneys, TPAs in their area that can have impact for them. And if they don't have anybody that we can get our arms around, that we know and we can love and we can trust, then we use the systems that we have in other states and other cities to help build that relationship. But why do we have all of those partners? It's because our underlying theme of service. We're our clients' advocates. And in this scenario, we're the institution's advocates. So we work to source the carriers that and the custodians that meet their goals and expectations, not the other way around. Not the one that pays us the most. 99% of the time it's not. It's generally whatever is right for them, because we represent you. Now, we do the same thing on the advisor and the agent side as well. It's our job to work with our agents and advisors. We do goals-based calls and goals-based meetings with our agents and advisors to truly assess what their goals are and how we can help them accomplish that within our organization. Which division, which business model, which unit, what works. The unit we're going to talk about today is our institutional services division. We have multiple units. We have an insurance-only division, we have an investment-only division, we have an institutional services division, and we have our wealth management division, which captures all of them. In our institutional services division, this division actually, our Central Texas group, is led by Ryan Bubella and Zach Jones. They're sitting over here. Wait. They run all of Central Texas, and we were able to partner together, and we sponsored 450 credit unions in the Cornerstone League for our area, which covered Oklahoma, Texas, and that was it, right? Texas and Oklahoma? All came down to San Antonio, and we sponsored their event, and we were able to get to know those folks. So what we do with institutions is we develop the investment and the insurance programs for them. If they have a plan, we show them actually how to make money doing it. Because some of them say they have it, but some of them are just putting lipstick on a pig. They don't have anything that's really driving revenue. And our goal is to drive bottom line revenue with as little upfront cost. Talk to your CFOs about that. I want to decrease your overhead and increase your bottom line. Would you be interested in having that conversation? Which CFO in any company will turn you down for that meeting? What do you mean you're going to decrease my overhead, you're going to increase my revenue? How does that work? You have time on Tuesday at 2? That's me. We build consistent revenue streams. It is about revenue when you're dealing with institutions in general. They want to serve their members if they're a credit union. They want to serve their shareholders if they're a bank. But at the end of the day, they all go to the second page of the financials to see where the revenue is being generated. So you have to know that walking in there, that it's a different meeting. The relationship is important, but it is important that you understand where their number one driver is. How do we serve? And how do we make money doing it at the lowest possible cost? Because they are being constricted today. So we also work to provide OSJ services, business development services, and set up and recruit advisors for their institutions. So we'll put in insurance advisors, we'll put in investment advisors. We'll bring that whole system to them from soup to nuts, or we'll enhance an existing plan that they already have. We streamline their existing benefits program. This is what Stephen was alluding to, and this will be the case study that we talk about in a little bit. One of the things that we have found when we walk into an institution is that they have multiple advisors, agents, TPAs, and sales reps all pitching them a widget. Is that right? Because they're a target. So when you sit down and we talk about streamlining benefits, we want to be their one-stop resource for all of their executive and employee benefits. I don't want them to go see you if I'm in there, unless you're one of my guys. It's easy. Good luck to Steve. But one of the things is that we don't want somebody to be able to come behind us and say, well, why didn't you show us that? So we actually sit down with CEOs, with CFOs, with the chief HR people and find out where all of their pain points are. Because we want to do all the benefit legwork for those institutions. When they think benefits, we want that first phone call to be us, whether we do it or not. Can you do ABC? 9 times out of 10, I'll say yes. I'll come back into the office and say, okay, how are we going to fix this? They need A, what are we going to do? And then we'll get our strategic partners on the phone and figure it out. Because that's what you do. We provide multiple custodians as a way for different ones to affiliate. So the big push right now is fee advisory. is assets under management. So that's why we have LPL, Schwab, and TD Ameritrade. We are a hybrid. We own our own company. We have advisors that are fee only that just clear through Schwab, TD Ameritrade. We have advisors that just clear through LPL. We have advisors that clear through all three. The reason that becomes important is because we don't have to peddle a product to any of them. Nor do we care which way they affiliate. We're pretty agnostic about it. It's how do we generate the most revenue for you and what fits your business model the best. We do provide joint work opportunities as well. We do all of the supervision. We have in-house money management. We've been doing that for a little over a decade, and we have all access to various third-party money managers as well throughout all of those different platforms. Now, our advisory services for institutions, this is how we start on the advisory side. So you're going to get two pieces here. I'm going to walk you through what we do on the advisory side, and I'm going to show you what we do on the insurance side, so that whatever's apropos for your business model, you can take whatever nugget you want out of that or throw it away. It just depends on what your model is, right? LPL Financial believes that objective financial guidance is a fundamental need for everyone. We enable our clients to focus on what they do best, create personal, long-term client relationships that are the foundation for turning life's aspirations into financial realities. All right. I don't ever show the institution that slide, except in the binder, right? Because at the end of the day, they don't care about their financial aspirations. They care that I've got a board meeting on Tuesday, and I've got to show how I'm going to fix this problem because my revenue's down. Bond prices stink. I wasn't able to get the right note. How are we going to fix it? Show me where I can add it to the bottom line so I can tell them we have a fix. Okay? Can I add an advisory team to it? What do we need to do? So we jump into here real quick because we want them to understand that when we partner with them on the advisory side, that LPL is one of the biggest games in town from an asset management standpoint with institutions. They have over 14,000 advisors. They have over 212 billion in advisory assets, 297 billion in brokerage assets. So they know that they're of size. The next thing that the president or the CFO generally asks is, how big are you? Because we're dealing with you. Most of the time, these institutions are under $1 billion. When you tell them you're about 600 million, it gives you a seat at the table. It helps. Any institution below that tells you, thank you, we appreciate that you allowed us, that you came to see us, because we're an $80 million institution. You say, you're right. You're lucky that we're here. No. Sometimes I do. That was only once. But she aggravated me that day. People want to get into a situation where they want to know that you're going to be around. Firm established in '81. Built a company from insurance and mutual funds to investment advisory firm. We own the companies. We partner with multiple custodians and strategic partners. We have over 600 million in assets between brokerage and advisory assets. It's important that they hear that because they realize that, one, you're not a one-trick pony. Two, you have been there and done that, and you have stick-to-itiveness. That you are going to be here when they need you. Because the relationship is not going to be with LPL. The relationship is going to be with you. It's going to be with you. It's going to be with you. Because it doesn't matter. They'll move with you if you treat them right. And they'll die on the cross for you if they know that your best interest, that their best interest is at heart. And that's what we have to focus on. So LPL has an institutional service division as well. They have an independent advisory services division as well. We work across all of those firms. We're an odd duck in this industry because we clear across all of the BD channels. We clear across all of the hybrid channels as well. That was strategic in its design. It's complicated for most to understand, but when we walk into the room, we're an open book. It doesn't matter where they want to go with their assets. Let's find the right fit for you. Because your local Edward Jones guy is not going to be able to do that for you. It's not going to happen. Because I can bring all the big boys to the table. I can bring top 5 firms. I can bring firms that are #1 in the banking institution relationships. They are the biggest game in town. By 50%. The closest person to them is Cetera in this space. So when we walk into the institutional channel, we're not bringing the B team. We're bringing the largest institutional services division with broker-dealer, RIA services, clearing and custodian. We're the insurance BGA. I don't run that through the BD. We run that with AFG and our strategic alignment with them. So that all of those assets are captured under one roof. They don't have to go anywhere to bring 50 carriers to the table, to bring 4 custodians to the table, to bring high-level assets and managers to the table. And all they have to do is come to one of our conventions to see top speakers from Jackson, from Prudential, from Forethought, and we fly them all in from all over the world to come talk to them. And they can meet them. So one thing you have to know, if you get into this space from when you're marketing credit unions and banks, is they talk about a study, it's called disintermediation. What that means is that banks and credit unions fear that if they add an insurance or an investment program, that it will detract from their deposits, right? Because they make their money off of taking somebody's money in and loaning money out. So the fear is that that's going to happen. Now, what you see is when you add an investment relationship at a primary banking institution, they actually increase deposits and increase the average savings account. Why is that? Because you are garnering assets from other institutions that are now coming to that institution. So they are finding assets that they would not have had anywhere else. And this strategy will show you that they also use credit products more. They also take out bigger lines of credit. They also borrow money from for their vehicles. Why is that important? Because now you're driving other revenue to the institution just by having the program in place. Just because your advisor or your agent are doing a great job in harnessing assets from other institutions and bringing them in-house. Because what do your clients not want to do? Your clients don't want to go everywhere either. They don't want to have to see 10 different people to make sure that their insurance is right and that their investments are right. They want to see Kenner. They want to come to you and know that they get it all done. Because their time is valuable. But what they don't want to have to do, or what they don't want to have to do is, we got to go to the bank, then we got to go see Kenner, then we got to go over here. Where if he has an institution, he can bring all that in, he can pick up the phone and say, hey Joe, my client needs $1 million mortgage, they're going to buy their second home in Aspen, can you provide that for me? Yeah, will you send me the quick app? Sure. They email you the application, you hand that to your client, say, hey, go ahead and fill this out. We have a strategic partnership with ABC Financial over at the bank, they're going to take care of it. Wow, you can do that? That adds value. That adds value. A bank in Oklahoma, we've sent them over $10 million in loans this year. Credit union in Houston, we've sent $3.5 million of loans this year. Do you think they value that relationship? When there's an issue, is the first thought, oh, we're going to leave them? No, the first thought is, hey, Reagan, we need to fix this. Can we take a look at this together? Absolutely. Because it's a partnership. It's not me taking money from them, it's me adding dollars to their bottom line. So they're 58% more likely to use all of those services. Now, I won't belabor this, but it is important that you understand that households that purchase an investment at their primary institution lock themselves in. So their advisory accounts were high, as well as their asset management accounts. In those, the average balances in those accounts increased per institution. So not only do you have higher advisory assets, but you also have a higher banking asset for each institution. 6% more likely to use all of the services provided at that institution. The reason you have to understand this is because when you engage in that first phone call with maybe a buddy at the club that's the CFO of that institution, it's that they understand the map. hey, I know you're worried about deposits, but what if I can increase your deposits by 10 or 15% over the course of time, over the course of the next 2 to 3 years? Would that be of value to you? While I drive bottom line revenue growth without top line cost, would that be of value to you? If it is, let's meet. If it's not, if you don't want to drive down top line cost and add revenue to your bottom line, then we probably shouldn't meet. Who's going to tell you no? Because I can guarantee if the board president hears you say that, and the CFO said no, you won't have to worry about that CFO next month. Because that's all the board's talking about right now, is driving bottom line revenue and decreasing top line costs in the institution. 6 times as many households view institutions with more trust than full service brokerage firm. So, we're a full service brokerage firm. I know that I have more trust when I go into it with one of my strategic partners in an institution. Why? Because it's implicit. Why do you go to a CPA? Well, he's got CPA at the end of his name. He's bound to know how to do my taxes. You know, some CPAs don't know how to do taxes very well, right? But they get that authority. Well, banks and credit unions are the same way. They have that implied authority. So we're tagging on to that by adding a value-added benefit that drives revenue for both parties. The goal there is to bring in investment opportunities and increase their trust in their depository. Among households that trust banks a great deal, 15.6% have purchased the investments at their primary institution. 38% have larger checking account balances and they have 140% larger savings deposits. Those numbers resonate with CFOs. And they're much more likely to use the credit products because they're keeping it all in-house. So they're 3 times more likely to purchase where they bank, and they own the asset and advisory accounts, which is what we go for. So from a risk management side, this is the disclosure. Well, it's too risky. All right, it's too risky. We're going to add this. Spillman's going to mess it all up, and they're going to lose my relationship with my A client at my local credit union. No, actually not. Here's what's going to happen is we're going to handle all the counterparty risk. We're going to handle all of the due diligence, suitability, surveillance, settlement, arbitrations, any of those things we're going to handle. The only thing you have to be concerned with is reputation. And Spillman's a good guy. Would you agree? Well, yeah, he's not a big issue. Okay, so if that's your only risk, and we're going to decrease top line cost and increase bottom line revenue, would that be of value to you? It's a lot easier to get an appointment that way. So we have cross-platform structures and services, financial institutions, LPLs in the middle, NFA Wealth Management. We're the hub. We bring everything into the organization. Quick pro forma, I won't bore you with some of the numbers. We include some of these just so you kind of get a flavor for what the institution gets out of this. They have $275 million in deposits. Generally, the first year they can expect somewhere between $35,000 and $40,000 of revenue based on their split. Because by the way, we pay the institution to allow us to have that relationship with them. As that grows over time, it continues to increase, and we didn't include long-term care or life insurance because we set up a separate contract with the institution. We have an NFA contract that ties back to our AFG contract. We marry all those up in the back office. Tracy coordinates all that. And so it all links so that they still get revenue for all the insurance products and services that they do. Our benefit service, our objective here is to streamline the installation and operation of administration and institutional benefits. This is the second phase. So first phase, investment advisory, right? We go in either way. Depends on what their pain point is. So I'll ask them, what's your biggest pain point? If they tell me my benefits are a mess, I take the top half of that presentation and move it to the bottom, and take the top and move it to the top, or vice versa, right? We move it around based on where their pain points are. We want to decrease the time and expense and work involved for employees to administer and vet each program or function. How many HR people do you have dealing with your benefits right now? I got 2, and it takes her all day. It takes her 3 weeks to do it. She's got to take it out for bid. It's a disaster. We only get 1, 2 bids, and we don't understand what we have. Fantastic. Would you like us to handle all of the bidding? And would you mind if we participated? No. You can do them all. Yeah. Why don't we put all of our strategic partners, kind of like the lendingtree.com scenario, let's let them all bid on your work. And we'll vet that. Would that be of value? Remember, it's of value. We talked about changing the conversation. Two different areas already this week. We want to change that conversation with them because we want to be on their side of the table. I don't want to have to sell them a widget. I don't want to have to pitch them a new shiny star. I want to share with them how we add value to their organization. That's what's important. How do we serve you to add value? So, institutional wealth management, 401k programs, supplemental executive retirement programs, Keoli, BOLI. We actually partnered through Nolan Financial Group with AFG and Cavalier to make that happen. Group Life and Disability, we partnered with gentleman Jeff Spring from Boston Mutual as well. So we bring in these programs as they see fit for each institution. Now, services provided. See, this is a busy slide. The key things that you want to take out of this from an advisory standpoint or an agent standpoint is customized plan design, servicing and review of the programs, carrier and custodial vetting, board education and reviews. Because every time the board sits down, somebody's trying to sell them something, but if we educate and we review their existing situation, that's where the primary focus is. This case that Stephen and I worked on together, the reason that became successful is I sat down with the board president 2 times for 2.5 hours. And we went over the plan together so that he could sell the plan to the board. Didn't mean that I didn't have a 2.5 hour meeting with the board and got pelted with questions. What it meant is that I had an advocate in the room that just happened to be the chairman of the board. They could stand there and say, "Why are you guys being stupid? We should do this." Those were the words that came out of the chairman's mouth. And the attorney sat down and went, "Oh, it's nice to have an advocate, but it comes from education and support. They have to know that you care and that you're there for the long haul, because these things don't take, these aren't a one and done deal, right? And it's not a one meeting thing." So we link all of their primary benefits together. In the institution game, what they end up with is they end up with a CERT, they end up with a Keoli or BOLI, they end up with a 401k, they end up with a non-qualified deferred comp plan, and they end up with some group benefits. And they end up, out of those 5 plans, it takes TPAs for 3 of them, so they end up with 8 different people billing them. What if we can link all that together and provide you 1 TPA and cut your overhead from $40,000 a year to $25,000 a year? And, oh, by the way, bring in a resource team that they can access online and have people on site if you need them. Would that be of value to you? HR people go, "Oh, hallelujah, can you do that? I hate our benefits." And then you go take them to lunch and then they really tell you what's going on. Okay, I don't like this, and I don't like this, and oh, by the way, we're standard, and I got this, and this person's doing this, and can you move this, and can I send you an illustration? Absolutely. That's why we provide so many different opportunities for them to work with us with so many different carriers. Planning options, we just went through that, so I'm going to get into the portfolio services. So we add this because TD Ameritrade and I, we have a good partnership in that we can actually set up the bond program for the institutions if they need it. So there's an issue right now of when the institution wants a bond or they want to go buy their CD ladder, what ends up happening is they take it out for bid, they get 3 or 4 different quotes, they have to deal with the markups and markdowns. It's maybe way too busy for what we want to cover today, but it ends up costing them money, where we can bring it all in, charge them a flat rate, they don't have to worry about